Today, you may know me as ChewDog, and I do prefer that name. But back in the day, I had the uncanny ability to pick stocks, tops, and bottoms, and nobody knew how I did it. I'm showing you that information now, but back then I didn't share it with anybody, and I had the ability to time the market, and hence I earned the nickname VooDoo. And even though today I believe that there is a strong possibility that we're reaching that market high and that in years to come, stock picking is going to be difficult, you still can pick stocks, both for buying and selling, because there's always an opportunity out there. So today we're going to take a look at some stocks, and I'm going to show you more of the process. So let's VooDoo. I believe strongly in both fundamental and technical analysis. And when it comes to fundamental analysis, one of the great resources out there is Investors Business Daily, or IBD. And so today I'm going to read from a recent article from IBD and compare and contrast the two different processes. Reading from the article here, and you can look at the chart and follow along. It reads as follows. Can a pair of bases by the same stock produce a superb breakout? The base-on-base pattern, which strings together two or more separate bases, appears frequently on the stock market landscape. And why? Sometimes a stock is ready to break out to new highs and does so, but the rally does not achieve a 20% gain because the greater market is taking a break or even going into a correction. When the market is shaky, stocks have a tougher time going higher. Most stocks follow the market's direction. So when the stock you have bought correctly and researched thoroughly did not produce the 20% profit that you had hoped for, despair not. Watch for a new base to develop on top of the earlier one. The new base's low can slip into the prior base, but ideally by not much. Schlumberger, as a chart you see here, is one of the largest drilling and well firms in the vast oil and gas industry. It created a pair of saucer bases before breaking out and achieving a 25% rally in 2014. In the week ended September 6, the Houston-based firm moved past an $85.12 entry on a super long saucer with handle. The base was as long as an airport runway. Schlumberger's fundamentals were heating up in the second quarter of 2013. Earnings per share rose 14%. Not amazing, but the company showed a long record of steady growth. It also marked the highest increase in 4 quarters. The stock rose for 7 weeks in a row, up 11.5% to a 50-week high of $94.91, marked there as the number 1. Meanwhile, the S&P 500 staged 4 distinct pullbacks of 5% to 10% from May 2013 to February 2014. The declines were light, but they were enough to spark a new price correction in Schlumberger. The decline pushed Schlumberger all the way back to its previous $85.12 entry, marked as number 2. The time to buy arrived several months later. The stock molded another saucer pattern that could also be seen as a flat base. The base's decline was a miserly 10.5%. Schlumberger's March 24th, 25th breakout past a new $93.94 handle entry came in big volume. On July 1st, Schlumberger hit a high of $118.76, up 26%, and ripe for a great sell. So now let's go ahead and contrast that with my chart. So this is my chart on Schlumberger going back to 2011. And what I've done here is I've drawn the 2 breakout lines at this level here, which was in, say, mid 2013 was a buy point, and then early 2014 was your second breakout or second buy point. Now, my problem with this system and other systems out there is once the stock price is moving in this direction, it's actually pretty difficult to pick up these sort of breakout points. In my system, let's take a look. We'll go through here into the MACD. Here in my system, at least through the MACD, you've got the fast line coming down here, basing, and then heading up and actually breaking through the trigger line or the slow line in late 2012. It's way before your first buy point here, which is in mid 2013 at this point here. Then the sell. The sell is not as easy, but you can see here that the fast line is moving on up here and then begins to decelerate at this point and then turns down here. So my sell signal is perhaps about as good as their sell signal here with this relatively strong downdraft. Now, moving below here into the histogram, that's not going to give you much of an indication, at least on the sell. Here, the momentum, we're peaking at this point, probably not much of a better indication than IBDs. Price rate of change, not much better. Neither is the relative strength. Perhaps the stochastic gives you a little bit of an idea, but you had two false moves here and here. And remember, you want to have more than just one oscillator give you the indication of a buy or a sell. You need to use these things together. And then the Williams, you saw the Williams moving on up and then peaking here at this point up to the zero line there. So perhaps you'll have an indication there by the Williams. But at least my buy point is much better than their signal. I have, or you have, an idea a year and a half, even before their particular buy point, as you can see here on the price chart. And another problem that I have is I always notice that when you read these articles, they show stocks from several years ago. Rarely do you have something that is current. Well, let's take a look. What do we have here currently? And as you can see here, you had a potential buy point at that time frame there, and then it looks like we may have another buy point coming up here soon. You won't read about that in most articles that you're perusing for information. At this point there, you can see that if you did follow this buy point here, you could have bought here at that level. And when would you have sold? I don't know if you would have sold here. You may or may not have. It's possible. Take a look up here. That's your peak there. Would you have sold here with their system? You probably wouldn't have bought in with their system. So this one might have been a false indication. But we're coming down here at this point again with the fast line moving toward the sideways and ready to move through the slow line. This is another potential. So what you want to do is you want to match up your technical analysis and start reading and studying the fundamental analysis. What is happening with a company right now with regard to revenue and earnings? You want to use both fundamental and technical analysis together. But in my system, I believe that at least through my technical analysis, I'm going to have a heads up with regard to a stock several months, if not longer, before a good buy point. So let's go to the next stock. And the next stock in the IBD article is Winnebago, and the symbol is WGO. And without reading the article to you, I'll just cut to the chase. Basically, what you have here, starting at this point, is the cup moving down here, and then the handle here. And so your breakout point or your buy point is in here, the June 2017 into September 2017 time frame. But your buy point is here somewhere around $35 a share, and then off you go. And then again, like the Schlumberger article, there is nothing, no information with regard to your exit. And to me, your exit point on any stock is equally as important as your buy-in point. So you're left to your own devices of when you're going to sell. So now let's go take a look at my chart. And this chart here is Winnebago, the monthly chart going back to 2011. And I've drawn here, this is your breakout level, at least by IBD at this point here. And again, the sell point, you have no idea. Going back down here into the MACD, you can see by my process, this point here, you're going to have a potential buy-in in, say, early mid 2016, well ahead of this point here, about a year ahead of that. So in the meantime, you can be doing some technical analysis, but certainly you can study the fundamentals to see if the company is improving. You're going to have an advance notice of a year. Let's go back down here. Now, we had the move through here, and this point there, that is basically this point here. So it's come down to that point there and then up to the breakout point for IBD. For me, I'm not sure if I would have stayed in this stock given this move here. Depending upon what the fundamentals were saying, you might want to exit or you might not even want to have entered. But moving on up through here, again, the sell point, you're left to your own devices. And to me, you've got to move up here and you're starting to decelerate here. That's a sign of a sell. Moving down here, these other oscillators aren't going to give you much notice, at least on the sell. They will on the buy point, such as there. And here in the price rate of change, you had plenty of notice that things were improving on this particular stock. Moving here into the relative strength, somewhat the same. Stochastics is a bit muddled, but you had this here, and certainly moving on up through here, you would have some advanced notice there, and perhaps as well in the Williams. Back up here to the price chart. Would I have bought in here? Probably not. Winnebago is not my cup of tea, but at least by the comparison with IBD, I think you would have some advance notice. So if you want to follow IBD's system, and that's just fine. But I think if you use my system, at least as a tip-off point, then you can be taking a look at Winnebago well in advance of IBD. So that's it for today. It's ChewDog Charts. Thank you.